Global settings, ledgers. We'll cover the ledgers. Define setting for ledger and currency types, very important. This is interview part. Enter. Okay, in SAP, we have a landscape of ledgers. And there is only one leading ledger which captures all the entries and calculations and adjustments are done at this level. And at the ledger level, you can assign accounting principles, but we will not assign it here. We'll keep it empty. I'll select this. Company code settings. RC44, double click. Posting period. Parallel accounting, check. Accounting principle gap. Functional currency 10, that is company code currency. Okay. Currency type, PKR. Global currency, PKR. Controlling object currency for CO is 10. The source over here means it will take the transactions from here and show it in the controlling area. What are the accounting principles that are available to us? There are none. Gap 60. IFRS. Enter. And you can enter as many as per your jurisdiction. Save. Save. Okay, this is done. If you go to ledger, we have two kinds of ledger, standard and extension. Standard, difference between standard and extension is very minimal. In standard, of course, you can maintain it for different accounting principles, and it can receive entries as well, manual entries. So a non-leading ledger can be a standard ledger with different currencies and accounting principles, and it can be defined here accounting principle. But an extension ledger has to depend on any one ledger. It can be non-leading and leading, any one. So the underlying ledger here is 0L. And why do we need extension ledger? In some cases where your country jurisdiction is different and you have to show, for example, it's an American company or a multinational company, it has to show entries in USD or any currency. Extension ledger will take all the entries from 0L. If this company, for example, is operating in Pakistan, it has to show its books in America. So it will take all the entries from the base ledger, the leading ledger, and show it in extension. You have the option to disallow manual postings and have its own accounting principle. That is the main difference. Okay. Plus, let's say we go for standard USD ledger. In standard USD ledger, you can add a company code. It can have its own global currencies and freely defined currency types. Okay, as many as you want, where you can have 8 different currency types, plus fiscal year variant can be different, posting variant can be different, parallel accounting, and financial currencies can also be different. In this way, you can report a company residing out of the country's jurisdiction in this way using standard ledgers and extension ledgers. Currency types are document currency. Your document currency can be different from company code currency. This is available throughout the landscape global. Group currency, this is company code specific. Hard currency, which is again your hard currency that you deal in. index based, and so on. We have different type of currencies here: profit center valuation currency, and in this currency type we can actually give these currency types companies code specific operations, or it can be global throughout the SAP landscape. Okay, and this can be added to your standard ledgers. Okay, conversion settings for global currency. Company code currency, it will take the currency from the document currency and translate it at the translation date, standard translation, which is dependent on the rates, because it will be real time. And some options will be translated on the posting date. Posting can be done later on as well. We will see when we are actually doing the entries in the documents. Okay. Orient material, it is empty, and let's say this is GBP. Over here, conversion settings for company codes can be used. Okay, and a translation policies can be implemented here, right? So save. So you can report in different currencies. You have the options. This can be asked in the interview. Ledger is done. Next part is define a ledger group. You can define a ledger group for your company code, which can be in any other currency, and the dependent ledger will be base ledger, leading ledger. Okay. Next is parallel accounting. Define accounting principles. Not parallel accounting, sorry, integration. Integration. Define ledger for CO version. This is a very important step. Again, new entries RC44 version. Now, what is a version? Version R for plan values, actual values, and plan actual version. They have maintained only one. Ledger compatible is 0L. You can also give another ledger as well, which will work with the controlling area. Okay. This is done. Important step. Okay. This is done. Okay. Intercompany clearing. We're not doing intercompany clearing, but these clearing accounts basically are between company codes whenever there is a transaction in different currencies, or for clearing for material, or for currencies, or for anything. Okay. Now, next comes in parallel valuation, another very important area. You have to define this basic settings, maintain currency and valuation profile. New entries RC44. Currency and valuation profile. RC44 valuation currency profile. Details. Company code currency, that will be legal valuation. There are three types of valuation: group valuation, profit center valuation. Legal valuation is what is shown and updated in financial statements. Group valuation is for group of companies, and profit center valuation when you have profit centers based on that. So in effect, interviewer can ask you how many financial statements can be made. Based on valuation levels or views that you have, you can have three types of financial statements: for profit center level, group level, and legal level. Legal level is for everyone, group is for internal, and profit center is, of course, as per your profit center definition. Okay. Save and save. This is done. Let's go to the next step. Assign currency to controlling area. So currency and valuation profile is added to controlling area, not company code. Why? Because at the controlling area level. The costing, the product costing, profit area valuation is done at this level. So materials are valuated at valuation profile level at this level, RC44, and product costing is done at material level at controlling area. Okay. Done. Okay. Create version for valuation methods. We have different versions, as I told you, actual, plan version 1, plan actual 2. Why do we have plan version? Because they can be different types of material costing. You have to plan that at plant level. So valuation area is also the plant. And there is an order, for example, for a sales order for a finished good that has to be produced. So you create a plan version that this many materials will be produced at this cost. And then you have plan version 2. If, for example, you have to shift the manufacturing to a new plant or subcontract it, then you will use and populate plan version. Then actual plus target cost. Target cost is the planned cost. Okay. And use will be different. Transfer price for jobs, transfer prices between manufacturing jobs. Progress analysis, this is for cost of goods manufactured. Material ledger. Material ledger is now a part of S/4HANA. Cost forecasting, this is also used for that, to forecast what will be the cost of the material. Cost estimate maintenance order, again for the production, where you for plant maintenance you have to create a cost estimate. Budget control system, frozen version. Okay, so in 0 version we have plan values, actual values, work in progress, plus variance. Variance is added to margin contribution, margin accounting. Okay, where material cost, production cost, and variances are added. That is margin contribution 1. Then comes in material overhead, production overhead. Okay, and that becomes margin accounting or margin contribution level 2. Level 3 is distribution cost, sales cost, research cost, and that becomes margin accounting level 3. 3 levels. So variances are part of contribution accounting, margin accounting. Okay, that is how you actually set this up. Controlling area settings, 0 version. Controlling area settings, plan actual version, legal valuation, settings for each fiscal year. Version lock, no, we don't want any version lock. Integrated planning, yes. Copying allowed, yes, for next year. Okay, and that's how you maintain versions, plans for the next years as well. Navigation not permitted, this is locked. Okay, this is done. Check material ledger settings, currency types, and define ledger types. Material ledger type RC44. Material ledger RC44. That is done. And the characteristics for material ledger will be company code, currency. Save. And we have saved this. Assign material ledger types to valuation area. What is valuation area? The plant. Okay. Now, new entries, valuation area RC44, material ledger type RC44. Does not exist. Valuation area. Okay, valuation area does not exist. We'll create one. How do we create that? Let's see that. Okay, we created enterprise structure, definition, logistics general, valuation level. Valuation level is a plant. Okay, it's already defined. Plant, define plant, and that will be new entries RC44. RC44 Rubik Cube plant, RC44 plant. Factory calendar, it can be any. GB, save, IS, oh, PKIS, this is done. Okay, done. Plant is made. Location will define this later on when we go for material management. Assign plant to company code. Very important. New entries. Company code RC44, RC44. Your plant is your valuation area. Save. Okay, now we go to the next step. That is controlling area, valuation methods. Material area, new entries, valuation area, RC44, RC44. Okay, now it says it's okay because valuation area is plant which is already defined. Now, activation of valuation areas for material ledger. Material ledger setting RC44, execute. Okay, material ledger inactive is not active, no worries. Activate material ledger. Material ledger. Okay, position RC44 and price determine material ledger is active from here. Price determination will be transaction based or single or multi-level. Multi-level. We'll see this in material management. Transaction based. Live data must be converted. Okay. Once this is done, this is also done now. This is an important part. Okay. Okay. Level of detail. Define valuation clearing. We'll do this later because we haven't set up any accounts yet. Parallel accounting. Define accounting principle. Let me just go over this. These are the accounting principles that you can maintain with new entries, and you just have to mention the name. And based on that, you actually create your financial, your statement version. Financial statement versions are created from here. Okay. Once this is done, we're done with most part of it. Now, next comes in the next part, that is general ledger, business transaction, document splitting. Okay. Now, document splitting, what is this? Let me just head over to OBD4. What is OBD4? Chart of accounts. Okay. Position RC44, and we have these accounts. Okay. Now, what is document splitting? Document splitting is basically a concept. Let me tell you that. Okay. First, the hierarchy. Hierarchy, company. We defined it. At this level, we have operating concern. Under operating concern, we have controlling areas. And under company and controlling area, we have company codes. Under company codes, we have plant. We have assigned a plant, right? Then we have purchasing org. purchasing organization, sales organization, and under sales organization, we have distribution centers. Under plant, we have locations, okay, distribution centers and sales offices. So this actually comes under company code. While under controlling area, there can be multiple company codes. One controlling area is to many company codes. Okay, controlling area is to company code. So multiple company code can be assigned to a controlling area only if chart of accounts and plus fiscal year variant are the same. The chart of accounts is RC44, fiscal year variant is K4. So this is a condition. Okay, if any of this is different, this company code cannot be assigned to controlling area if anything is different. Okay, this is the hierarchy. Now, what is operating concern? Operating concern is nothing but a reporting cube. Now, what is a reporting cube? Let me tell you that. In controlling area, you have profit center accounting, cost center accounting, product cost controlling, and cost element accounting, and reporting cube. Now, what is a reporting cube? Reporting cube is nothing but it actually picks up a sales region. A sales region can be a profit center. For example, I want to see sales for Islamabad plus I want to see Islamabad showroom. I have defined Islamabad showroom as my profit center because this is where my sales are happening. So I want to see sales plus I want to see rate that was paid outward, okay, plus COGM. So this becomes part of the reporting cube, and this is done at the operating concern level. So this cube actually reports on a time dimension. That's why it's a cube. So time dimension plus profit center, that is your geography, plus your sales, plus freight, plus COGM. And there can be any variables as you like, as your clients like. So that's why operating concern sits above the controlling areas, while controlling areas take the transactions from company codes and so on. Okay, this is the hierarchy. Now, coming to document splitting. What is document splitting? Document splitting is nothing but when you actually purchase material or any expenses or like stationery from a vendor. Okay, and for example, 10,000 of stationery was purchased from a vendor. 10,000 this is a liability, but out of this 10,000, profit marketing or Islamabad ISB consumed 3,000 of stationery. Lahore profit center consumed 2,000. Karachi consumed how much? 5,000. Okay, so in simple accounting, this is not shown. So accounting standard says you have to break it up based on three types. That is profit center, business area, and segment. And yes, segment, what is a segment? This can be your business vertical. Now, what is a business vertical? Business vertical can be like detergent, automotives, apparel. A company can have all three business verticals, and these verticals can be your segments, and under segments can be profit centers. And profit center is Islamabad, Lahore, Karachi. So all of these profit centers are selling detergent, automotive, and apparel. Okay. So that's how segment actually is superior to profit centers, and this is used for segment reporting. So based on three types, segments can sound based on segments, business areas, and profit centers. Business areas are not used. They are used, but profit centers give a more molecular, and these are more prevalent because you can create financial documents based on profit centers. As you saw, the valuation method has profit center valuation as well. So you will pick profit center. So based on this document splitting, what will be the entry? The entry will be stationary. It's now about profit center. Okay. And 3,000 sales tax expense, let's say 200, and vendor 3,000 plus withholding tax liability, that is, let's say 150. Okay. So this will be repeated for every profit center, but the system will actually break it up. System will actually break it up. This will be for Lahore, and the values will change, of course. Okay, the values will change. So this is how splitting is done, and the system actually does it automatically. You have to define a default profit center. All right. This is document splitting. So we will do that document splitting here. Classified documents. RC44 is our chart of accounts, new entries, and we will head down to zero balance accounts. Control Y. Control Y. Control Y. Control C. Okay. Count from account 2. Now, what is this account? Zero balance. And we have categories for that. Now, zero balance accounts are used in clearing this document splitting. Why? Because withholding taxes liabilities will not be round figures. It can be 150.12. And in other transaction, it will be 230.8, and so on. It will keep on collecting. So this 0.8, 0.12 will have to be settled. Okay, so it will collect all 0.12, 0.8, 0.05, and it will collect all of these. And when it is a round figure, it will distribute between the profit centers. Okay. Adjustment accounts, 8040. Adjustment accounts. Where can it be adjusted? Expense, revenue, exchange rate difference, customer specific item category. 1,000 is assets. We have an assets category. 101 liquid funds, again balance sheet account. 80201 is clearing accounts, again 80,000. 20,000 is equity, again balance sheet accounts. 30201 is expense. To 20,000. 40 general GL accounts, again 0110. 90 HR accounts, again 0110. 70,000 is material accounts. We have a separate category for material accounts. 80201 miscellaneous. 30,000, 30,200 is income, revenue, income, revenue, 30,000, enter, and then we have recon accounts. 60,000. 60,000. 60,000 is recon accounts. Okay. Recon accounts will be for vendors and customers together. Not necessary, but we have kept it over here as that. 100. Okay. We'll keep this for vendors. Vendor. Okay. And 6101. 6200 will be for customers. Customer. Okay. Okay. 8,000 secondary GL. 010. 50,000 special GL. Now special GL will be 050. Special GL vendor and 50,000, 51 to 5,100. This will be for customer special GL. Customer special GL 8030 tax. 8030 tax. Taxes on sales and purchase, and 50 override. Now what is this override? What is a special GL override? Coming back to the discussion over here, this is a simple entry, but what happens is that this very vendor will say, I want advance payment. Advance payment is handled in SAP through secondary GLs. Okay, so whenever a vendor is split based on profit center, the vendor will be split. So it will give the effect. It will spill over the effect from vendor to secondary GL. Means the secondary GL will know for what profit center this vendor was split. That's why we have this check boxes. Okay. Now, page down, and we have tax 8031, control Y, control C, and this is for withholding tax. Withholding tax 5020, and your document splitting configuration is done. Okay, this is the base configuration. Next we will do in the next lecture. Thank you very much.